What's up, everyone? All right, so in this episode, I'm going to go over the week. This is going to be, I guess, a week in review. So something I think significant has happened here in the last 4 days. Of course, market was closed on Friday. But what's happened is we've seen a shift and we've seen some momentum pick back up. And that is great to see. It started on Monday with GFAI. So, Monday morning, sat down, didn't have any expectations. I mean, it's been slow. Obviously, Q1 finished slow because of everything that happened with the banking crisis in March. January, February were good months. They were a little slow, but they were decent. And then all of a sudden, March, we get the collapse of Silicon Valley Bank and Signature Bank, and it just created this whole distraction for really the majority of the month of March. And so anyways, it was really nice to see in April, the first week here, momentum coming back in a little bit. So the first stock was GFAI, and I'll show you my metrics for the week here, well, the month of April so far. So finishing the first week with $11,303.46 of gross profit. Average daily gain 2,800, not bad. Average winner $448, average loser 217, accuracy 69%, took 46 trades, an average of about 10 trades, 11 trades per day on those 4 days. Commissions $300, ECN fees $750. Made money Monday, Tuesday, Wednesday. Thursday was a small green day, and then Friday no trades, and the majority of my profit on stocks between 5 and 10. So 90%, 91% of the profit, approximately 90%, in that price range, which makes sense. So if we look over here at the calendar, not that it really matters. It's 4 green days here to start the month, which is great. But it began with GFAI on Monday. So GFAI was really unexpected. Initially, this one, and we can look at the chart, it started to squeeze up a little bit the previous trading day on Friday, and I had sort of it was like, whatever, didn't trade that on Friday, wasn't even paying attention to it. And then Monday morning, this is pre-market began Monday morning here at 4 a.m., so April 3rd. It pops up a little bit, but it kind of seemed like it was trending down. I was like, I don't know. I don't really think this is going to do very much. I looked at the chart and I was like, well, it's not a recent IPO. It is a reverse split, somewhat recent reverse split, but I don't know. I wasn't sure that was enough. And the float on GFAI was pretty low, but still just wasn't sure. So I was surprised at the open when it ripped into this halt up. And the way I traded this was, first it came into VWAP, and initially I was like, this is probably going to fade off of VWAP. It's probably a short. So I just kind of watched it there, expected it to fade, and then as it held VWAP, it broke and just ripped into this halt. And then on resumption, you could see we ended up going to 10 and then it pulled back. This thing really made a huge move. So that was on Monday. And I didn't trade it as well as I could have, but I got green. And basically, my attitude on it was, listen, this is the beginning of the new month. I didn't get a big cushion on it, but I am green. I just need to be consistent, lock it up, and try again tomorrow. So I did that, locked up a nice green day, came back on Tuesday, and we got a little bit more action, which I think was kind of follow through to the momentum on Monday. So then Tuesday, we have a bit more action. And then Wednesday, again, a third day of some decent action. Not that I was really crushing it on any of these days, but, we were getting some good trades. So on Tuesday, we had BFRG. This one made this really nice move. As you could see here, it gapped up higher on Tuesday morning. This one was a recent IPO. So because it was a recent IPO, I was more confident on that one. Got some nice trades. It didn't end up holding, but intraday gave us some good opportunities, and that was enough. So was grateful for that. And then on Wednesday, we had BURU. BURU, this one is also a somewhat recent IPO. I had sort of lower expectations for this one as well because it had already made its kind of recent IPO squeeze here. But, it did end up putting in a pretty nice move here as well. So that was on Wednesday. And then yesterday or on Thursday, we had GFAI again. And this one was a little bit annoying because I called it out. I was like, I think it looks good with a stop at 850. But the volume was really light. I just had it on my watch list. But anyways, ended up making a move from $8-9 up to 16, which was awesome. But I didn't trade it very well. Anyways, the big picture here is that for those of you guys who have been sitting on the sidelines, I think that there's some reason here to be a little optimistic. We just had a great first week of April. It feels like the drama in the banking sector has kind of subsided. The overall market is, holding up relatively well, which is great. We're back above the 200 moving average on the S&P. We're back above $400 a share on the S&P. And at this point, I think we've got a couple of things that are going to tell us whether or not things are seriously going to pick back up. A couple of things. So the first one, yes, we had a good first week of the month of April. My goal for the month right now is still 40,000. I reduced my goal from 100,000 a month down quite a bit to just 10,000 a week. And that was basically towards the end of last year when I just felt like I was coming up short and I was like, let's just reduce expectations and be grateful if I exceed them. So hit the goal in January, had a good month in February. And then March did not hit the goal. March was very slow. But now April on track, at least first week of the gates in good shape. So if I keep seeing some consistent momentum and we see some stocks that are opening up and that are holding their levels, then I think I'm going to be back into a groove of being pretty consistent, hitting base hits and hitting my goals in terms of weekly goals and monthly goals, even if they're a little lower than what they were in a hotter market. But whether or not the market's going to heat up in a bigger way, I think this is going to come down to the larger overall market. Last year we had the big run in energy stocks in the early part of the year, which, that was awesome. And then we had the Chinese IPOs through Q3 and Q4. That was great. That helped me have my best months of the year in August and September. So if we start to see a sector get some real attention, and AI is a possibility, but I'm not sure because it sort of did pop up and it wasn't as exciting as it could have been, and then it's pulled back a little bit. But whatever the sector is, if we get a hot sector, that's probably going to add some fuel to the momentum that we've already got kind of picking up here. And then secondly, we've got what happens in the overall market in terms of inflation and the monetary policy with the Federal Reserve. So right now, for the last year plus, the Federal Reserve has had their foot on the brake. They've been trying to slow things down, and they have been successful. I mean, to a certain extent, at least. The market has certainly pulled back a bit, and the economy has slowed down a little bit, but inflation is still stubbornly high. So we're at a point with the increase in interest rates where there's discussion about, how much further are they going to increase rates? And most people don't think they're going to increase too much more, which means we're basically, maybe one or two rate hikes away from what we think is going to be the top of this current move in rate hikes. And then we're going to pause. And as soon as we go into pausing, I think at that point, we're going to see a rally in the risk assets, including stocks, as people feel like, okay, this is how far we've gotten. Now we're looking to hold this level, maintain, and then hopefully next year, decrease in the interest rates, a cut. So we could be positioned well for a rally going into Q3 or Q4. It could start sooner. Of course, it's also possible that could change. The crisis that we saw in the banking sector definitely had some shock waves and made certainly people quite nervous. So we'll have to see if there's more, ramifications from this very historic increase in interest rates that happened so quickly. So there may be some more collateral damage that comes out and that shakes the overall market. Obviously, looking at company earnings through the rest of the year, is also going to indicate whether or not we're going to have this soft landing or we're going to go into like a full recession or something like that. So there are definitely some variables here, but I think the good news is that the banking crisis has seemed to have subsided in the collective conversation about the market, and we're starting to see some momentum pick back up. I saw Johnson & Johnson, just as a large cap stock, had its best day in I don't even know how long. This massive gap up here, back up above the 200 moving average. So that's always nice to see. A big company with a big gap. Pepsi, another large cap stock, back near all-time highs. Coca-Cola hanging out in a pretty good position here near the all-time high. Procter & Gamble. So you got a few of these big names that are certainly off their lows in the beginning of March, which is good to see. So yeah, I'm optimistic. I am still taking the approach right now of managing my risk. In terms of capital, for most of Q1, I didn't use more than maybe a fifth of my account on any particular day. I didn't take large positions. I wasn't swinging for the fences. I had a couple of nice green days, 11,000, 18,000. I think those were the two best ones. But I had a couple of red days too, $5,000 and $8,000 a day. So, right now it doesn't feel yet like the time to really size up, but my account is fully funded, I suppose you could say, and I'm ready to trade aggressively. I'm just waiting for that confirmation from the market. Towards the middle of last month, I was sort of wondering if I should take money out of my account because I was thinking, if we're going to have to settle in here for the long haul, if we're really in a serious situation with the banking crisis, maybe I should just take my money out. And then I kind of thought for a second, I was like, well, what bank would I rather have my money in? And I was like, oh, that's a good point. I don't know. So I just kind of left it there, but now I'm kind of glad I did because it's fine where it is. And I think for me, I sometimes feel like if the money's not working, I should put it somewhere where it can work, even if it's just, gosh, I could do a short duration treasury and at least collect some interest, pretty good interest, right now in this with these rates. But at the same time, whatever I would collect there would probably be a fraction of what I would make on a day where I actually use that money to trade because the market was hot. So I don't want to have a day where I need the buying power and I don't have it. So right now I've got a little bit more than I need, but I'm ready once the market gives me some reason to step up to the plate. And that really does come down to my own ability to be disciplined, to have self-control, and to have all of this buying power at my disposal, but to choose not to use it and to be very selective about when I'm going to use it. And something that I actually thought about, in terms of my weekly and even monthly goals or even annual goals is that, when I looked at last year, I had, my top 15 or 20 days produced. It was really significant how much profit those days produced. A couple of $55,000 a day, $60,000 a day. Those 2 days right there were 10% of my net profit on the year. So there is a part of me that wants to try to be selective and be willing to, hit it hard when things look really good, and then also be willing to just step back and stay on the sidelines when it's cold. And I actually did that for March. Was kind of something different happened for me in March. And I'll show you my metrics. I had a lot of no trade days. So this was the month of March. I had 1, 2, 3, 4, 5, 6 no trade days, which in 2 weeks that for me is historic. I've never had that many no trade days. So you probably didn't see very many recaps because I wasn't trading. But I sort of had the belief that, in the past, I probably would have taken a lot of low quality setups and generated a lot of commissions and probably gotten myself frustrated, 1 step forward, 2 steps back. And instead I said, you know what, I'm just going to stay on the sidelines right now. The bank stocks are the focus. I don't feel comfortable trading them. And I think that was the right move. So, I don't know. I'm perhaps trying to test that new approach with trading of being a bit more disciplined and actually just not trading if I don't see anything that looks really pretty solid that, gives me the potential to maybe hit my daily goal. Chipping away on really small winners. I don't know, and again, in this market that just doesn't feel like the risk is quite worth that reward. So trying to be disciplined, but I was really glad to have 4 decent days today or this week. Did not overstay my welcome, left some money on the table, but walked away green and had some really good, really solid trades, even if they were with smaller share size. So let's hope that this is maybe the beginning of what could be a strong second quarter. And, I'm optimistic that we're going to have a good finish to the year in Q3 and Q4. It's super early, so a million things could happen, but there's no reason to be pessimistic. I mean, it's better to be optimistic, I suppose. On the other hand, you could say it's good to plan for the worst and hope for the best. So in terms of planning for the worst, I guess that would just be based on if things really slow down more, we have another, crisis or more collateral damage from the interest rate hikes, and the overall market goes back to the lows of this recent pullback, which would be like a 20%, solid 10% drop from the current prices. It would be significant. Then I think I would just go back into the mode of being very, very selective, taking fewer trades, but being like a sniper that when something is hot, trying to really trade and make the very most on that as I can and let that tide me over through the next, stretch of slow days. And that attitude works just as well in a hot market, but in a hot market, you may just see good opportunities, back to back to back to back, and you're getting a lot of trades. So quality, I think that is going to lead the way, and that means you've got to be patient and disciplined. So that's my weekly recap. I hope you find it interesting. And I did write an article on this, which I'll put a link to down below, so you guys can check that out if you want. And, I also, for what it's worth, I think this is a great time to be studying because, number one, you're gaining experience in a little bit of a colder market, which can help you have a foundation and discipline. And, I also think, and I could be wrong, but I think that we're coming to the other side of this period that we've been in, where we're going to start to see things pick back up. And if you want to be able to capitalize on the hot market, you kind of have to have been in the market for a little while to train and to get ready before it's just all of a sudden hot. Because otherwise, like for me, when we came into the really hot market of 2020 and 2021, I mean, I was ready to go. I was well trained and I was able to capitalize on those markets. I did very well. But someone who just started at that time, unfortunately, they wouldn't have been able to do as well as someone who came in with a couple years experience. So all that is to say, I think it's a great time to start studying and practicing. And if you want to do that with me over at Warrior Trading. You can check out our Warrior Pro course, which includes access to the chat room, to the scanners. We've got charts that are coming out soon, as you can see. We've got our news feed. You've got my ultra low latency broadcast, daily mentor sessions, and everything else. If you want to learn from someone else, learn from someone else. But I encourage you to get started because it's no better time than the present. So that's it for me. Thanks as always for tuning in, and a reminder that trading is risky and my results are not typical. So make sure you take it slow and practice in a simulator before you put real money on the line. And I'll see you back here on Monday morning. All right, enjoy the weekend. See you Monday.